All right. He knows a lot about the markets. He's a big businessman in Chicago. Everybody knows him in Chicago. It's Mr. Craig Bolanos. He's a co-founder and a wealth advisor at VestGen Wealth Partners up in Chicago. All right, Craig. There's just a general malaise over the market. I just don't like it. It's like you've got that cloud of haze in Chicago. There's a cloud of haze over the markets. What's going on?
Well, the cloud of haze over Chicago is absolutely terrible. I canceled my pickleball match last night, but as you indicated, people are starting to get a little nervous over this stock market, particularly the sell-off that we have continued to see in the South Korean stock market, courtesy of the semiconductors now spilling over to our shores. But what we've seen is we've actually had rotation happening for several weeks, Scott, and the old school economy, the industrial, the material, the energy names, that money that came out of technology and semiconductors went elsewhere. So the market's been holding up. The question is that going to continue? My answer, yeah. Gold prices might not be rallying, but have you seen how well Mr. Copper is doing? That tells me this US economy is still chugging right along.
Well, we've got some of these earnings, that have come out, and everything's been, relatively good, if not excellent, especially when it comes to the banks. But I mean, so are we to believe that it's no good? You don't want to be touching AI anymore. Semiconductors out, hyperscalers out. Let's get rid of all those things, and move over to something else. I mean, is the AI trade over?
No, the AI trade is definitively not over, but this is a reminder that when we have capitalization weighted indices, there's a reason the S&P equal weights at all-time highs, even if we're getting a little breakdown in the cap weighted indices. This market has been broadening. I mean, take a look at some of the Mag 7 names that are still in the red on a year-to-date basis. But if you said to me, do I want to move away from innovation that leads to disruption, which is an investable thematic? Of course I don't. I just want to properly weight the different sectors in my portfolio so I'm not overcommitted with asymmetrical risk into one area. So should be people be looking at what you just mentioned 32 seconds ago, financials? Of course they should. And remember, the trend still remains intact. We're still in the rising trend of this market, and I think people should continue to lean into it.
Yeah, I'm probably an atypical investor. I do own some of those Mag Sevens, not a lot of them, but I do, and they have definitely not performed. I'm getting killed in the ones I do own, but I'm going to add to them. I just you cannot convince me. The technology that I've seen, I understand that there's market sentiment, psychology, and we're basically playing a big game of cards here. I'm not worried about it. I'm in for the long term. These stocks will be higher this time next year, so I'm going to add to my positions even on these ones that have really been dogs as of late, because you can't tell me that Microsoft is going to be a dog. You can't tell me that Nvidia is going to all of a sudden be a dog. But they are right now. I mean, that's just the way the world works. And I'm not going to get spooked out. So I'm going to be steadfast and add to my positions. So just so full disclosure, I mean, that's where I'm not going to be selling here at all whatsoever. It could go down another 10%. I don't care. Because you know what? I really believe in the things that I've read and seen as far as the research goes, Craig. I mean, this is probably one of the best, if not the best, investable times we'll ever see in my investable lifetime. I think it's been one of those game changers that is now, I believe, bigger than the internet was in 2000, the dot-com era. And this time around, it's not the dot-com. I know everybody wants to make it that way, but these companies are actually making money. They've got earnings, and if the S&P is got a multiple of 22 on it, some of these things like Nvidia are at 20, 21. I mean, they're below the ratios of the overall market, which is insane. So I'm steadfast. We'll see if the rest of the market is, but right now it's catching a falling knife, and I'm kind of getting beaten up. But that's the way the world goes. It's not always rainbows and lemonades.
No, it's not. And definitely, you mentioned the wildfires in Canada. The stock market is not going through a wildfire in any way, shape, or form. The earnings have been good. The market's resilience has been driven by data. It certainly hasn't been driven by sentiment. The wall of worry remains as large as it ever has in this bifurcated economy. In a weird way, that's good for the psychology of Mr. Market. And above
Yes, you're
all
right.
else, we
You're
need to,
right.
and above all else, Scott, we have to celebrate that inflation print that was released on the 15th of July, because the biggest story, forget the headline numbers, look at the fact that shelter, the housing component, that's 45% of the inflation data. And we finally saw once again the shelter prices coming down. That's what we need to have a durable trend lower in inflation in order to get the Fed fear off of our backs, where they can do what we all kind of want them to do, which is make sure they're acting properly to maximize employment and maintain stable prices. And I think it's that first part, maximizing employment, that they're going to have to be focused on at the end of this year and into 2027.
So far this year, Challenger Gray and Christmas. I don't know if you follow those guys. They're a jobs outfit research company. They've chalked up 22% of the job losses this year so far to AI. We'll see if that. I feel like that's absolutely going to accelerate, but we'll see. But you brought up a quick point before we go. I have been increasingly frustrated with the hawkish talk out of the Fed and anybody else that's been talking about raising rates. I think it's absolutely insane. And I have been saying that for 2 weeks now, even before we got these inflation numbers and seeing oil come off like it did. Now, you've got the CME FedWatch tool, which had been as high as a 41% chance of a hike before the end of the month at the last meeting on the 29th. It's down to 10. You can go over to Polymarket if you really feel like doing something over there. They have a 3% chance of a rate hike by the end of the month. I think that's much more in line with what I would be feeling. But for anybody out there, like the Dallas Fed president yesterday, Lori Logan, saying she would support mildly higher rates, I am apoplectic with I can't believe she could say something like that and what she's absolutely thinking. If you think that higher rates are going to bring oil down, or you think higher rates are going to bring the price of your food down, or if you think higher rates are going to help the housing market, well, then, hey, you have at it. Raise away. But we all know that's absolute bunk. And for her to say something
We
like
all
that
know.
also took the market a little bit lower.
I'm so sorry. All I just thought to myself, you said those words, higher rates. Yeah, it'll bring prices down through demand destruction. Who wants to destroy the demand of the U.S. economy? I don't.
Apparently, Lori Logan does. I mean, there's 9 out of the 18 Fed governors that voted at the last meeting to hike rates at least one time before the end of the year. I mean, that still to me is insane. And I wish these people would probably get out of the limo on the way to the Fed meeting every now and again and fill up that tank of the limo with gas and see how it is, or go into Circle K and buy a loaf of bread and just to know how the rest of the world is living, because it seems to me that they've been shielded from a lot of those things. Always love Fridays with you. I looked at the events calendar here this morning, Craig, and I'm sorry, there isn't anything really to get our teeth into excited about as far as data goes. So you're going to have to look for some other excitement here today. I'm sure somebody in the office can give that to you, but I appreciate you coming on. Everybody loves what Craig Bolanos has to say. We get so many great comments when you're on with the Cow Guy Close. I love having you on. I really appreciate it. So thanks for taking the time with us both then and now. Craig Bolanos, he's a co-founder and wealth advisor at VestGen Wealth Partners up in Chicago. All right.